Hello, everyone. We're just waiting a couple more minutes here for people to get settled in the meeting, and then we'll get started. All right, so it looks like the attendee list is kind of static now. So we're going to go ahead and get started. So first of all, welcome and thank you for joining our commodity webinar today. We're here to talk about the economy, how it's affecting our supply chains and our businesses. With a lot of the things that are happening in the post-COVID economy, the conflict in Ukraine, and just inventory issues that we're having. We kind of wanted to get together today and just talk through that. So give me a second here. So what we're going to do today, we'll just go through some quick introductions. And then we're going to talk more about the economy in general, macro view. We'll get into some tips on decision making and strategies to combat the situations that we're seeing. Talk about recovery outlook, which is obviously what we all want to happen. And then the last 15 minutes we'll use for question and answer. So just a bit of housekeeping. If you have any questions, please put them in the chat. And then when we get to the end, we will kind of farm those questions out. For the first, 3/4 of the meeting, we'll just be using the panel, we'll be talking to each other, and then we can get to questions at the end. So appreciate that. Just to kind of introduce myself and then we'll go back. So I'll just be moderating today. My name is Matt Heckroth and I am a product director at Aerostream. I've been working with the commodity team for about a year now. And I'm particularly interested in this conversation just to see the challenges that you guys are facing and talk about the ways that Aerostream can provide some solutions there. We have Ashley and Adam and Jerry here. Ashley, can you just explain a little bit about yourself and Restaurant Growth Services?
You bet. So Ashley Berland, I'm the Vice President of Supply Chain for Restaurant Growth Services. We are the holding company for O'Charley's and 99. So O'Charley's predominantly in the Southeast, a little bit in the North or in the Midwest, and then 99 Restaurant and Pub up in the Northeast in the Boston, really predominantly in the Boston market. I have been on the supply chain or running supply chains, it's over 20 years. We'll just go with over 20 years. I started my career with Einstein Brother Bagels back in the late 90s. Spent a bulk of my career there, also with Boston Market, and then with Famous Brands, which was Mrs. Fields and TCBY, running both their international and their domestic supply chain. I joined ABRH, which was the prior parent company of RGS, back in 2018. We had Village Inn and Baker Square, as well as Legendary Baking at the time. Those two brands for the family brands were acquired last July, and we have since sold off the manufacturing facility as well. So looking forward to the discussion today, and I'll turn it back to you.
Thank you so much, Ashley. And Adam, can you introduce yourself?
Yeah, my name is Adam Shrif. I'm Vice President of Procurement for GA Foods. We are a home delivered meal service primarily for seniors. We also do some hot commissary kitchens throughout the Southeast and some other segments, military and shelf stable. Prior to coming to GA Foods, I was working for Bloomin Brands, which is the parent company of Outback, Carrabba's, Bonefish, and Fleming's. Obviously in a procurement supply chain role, and then also prior to Bloomin Brands, I was with Buffalo Wild Wings up in Minneapolis, and worked in several supply chain roles there as well.
That's great. Thanks, Adam. And Adam and Ashley, we really appreciate you joining our panel today. And then last but not least, Jerry from the AeroStream team.
Yeah, thank you.
Can you introduce yourself?
Yeah, Jerry Dalton, Director of Commodities with AeroStream since 2018. Prior to that, spent 10 years with American Restaurant Association and been in the commodities in some form or fashion, from either the physical, financial trading, price risk management, contracting, and spent several years at Cargill, also up in the Minneapolis area. And happy to be here today and happy to go through this discussion and conversation, especially with everything going on. Thank you.
Thanks, Jerry. So I'm sure none of this is a surprise to anyone, but just to kind of level set where we're going to begin the conversation and some of the challenges that we want to talk through. Obviously, we are at the tail end of COVID. We hope that we're at the tail end of COVID. So there's been a lot of adjustments that we've had to make, particularly with where we're at in restaurants and supply chain. A lot of us are remote now. A lot of our labor force is remote. As you can see, the four of us are at home right now. I think a lot of other people are doing that. So a thing that's happened in restaurants that we've had to kind of pivot with is delivery and drive-through have become a lot more popular among a lot of other changes. We still continue to battle supply chain shortages, on-time delivery of raw materials, the commodities that we're going to talk about today, that feed into those finished goods. It's been challenging. It's been unpredictable. Hopefully, we see some relief from that soon too. And then the last 3 or 4 months, we've also had a pretty major geopolitical situation with Ukraine and Russia. The last 2 months, we've seen a lot of price hikes that even were beyond where we were at with the post-COVID economy, and it's been driving inflation up. So, Jerry, I was wondering if you could kind of just start us off and talk about what you see happening in the economy right now.
Yeah, sure. I think it's important to kind of look back. If you look at 2020, kind of the COVID year, 21, and running in at 22, it's sure as heck been a volatile time in the commodity markets, to say the least. And starting after what happened to 20, most of the shut-ins, you saw big retail pushes, and swings with food service shutting down a big portion of that. But as we came into 21, it was kind of a semi get back to normal, and things got up and going. And this is many Commodity One subscribers are used to our intelligence and our reports. We'll see the restaurant commodity index, and this is an index that we put together many years ago. The percentages you see there have nothing to do up or down movements in the markets, but that's the percentage blend in that index. So it's kind of an American style, kind of round, broad look at those markets together. 21, this RCI, and this is wholesale commodities, let me remind you, not delivered, delivered percentage, but wholesale. But 21, this RCI index increased 31.8%. And that translates probably, and this is a rough number, around 8% delivered costs. So far this year in 2022, we're pretty much through the first 4 months. We're tracking about another 15.4% wholesale increases, which translates to almost 4%. So over the last 16 months, a 16, 15, anywhere from between, let me say 12 and 16% inflation, which is, a very, very taxing, you know, and very, unfortunately, very consistent. So, and then we'll get into some of the reasons why here in a little bit, but I just kind of wanted to give everybody a snapshot of kind of, you know, what we're experiencing and where we go from there in a slide or two.
All right, thank you. So, Adam, you know, over the past 12 months, you guys have probably felt some of this too. Can you tell us a little bit about how GA Foods has been affected, and particularly if there's any other impact that you've seen from the geopolitical situation in the last 4 months?
I think for us, our largest challenge is just fulfillment. In general, we've had a lot of supplier partners that have done SKU rationalization, or they've moved to certain products that are ran more efficiently on their lines. And so we've really had to leverage our partnerships with these suppliers to ensure that we're still getting fulfillment. And then I would say in certain instances, we've had to pivot towards the spot market or spot buys and try to leverage those where we can. I would say we've also had to pivot in several examples from one commodity or raw material to another so that we can ensure supply and keep our production running as well. In terms of the, I suppose, geopolitical situation, I would say it's just really escalated pricing for us. And I would say it's made us pay closer attention to FOB points and really that like last mile delivery to our back door. So I would say we're more closely monitoring our inbound freight costs.
All right, makes sense. Thanks. And same question for you, Ashley. How have the last 12 months been for RGS?
Yeah, mimic a lot of what Adam has mentioned there. You know, the fulfillment rate, the unpredictability of what is going to be arriving at our back door, whether that be at the DC or even at the restaurants, as the labor pool has been pinched. So not only from a commodity and inflationary perspective, labor pool, I don't know where they all went because they have yet to fully come back. And so that has continued to be a pinch. And what that has done is, you know, you really, the partnerships that you do have with your supplier base are truly that of partnerships, but identifying, you know, not only secondary supply lines, but also tertiary supply lines so that you consistently have product coming in. The ability to maneuver quickly and to pivot quickly when there is an out of stock situation has been exacerbated over the last, you know, 12 months and even 16 months, rewind all the way back to the beginning of COVID. So it's just this continual, you know, challenge that we're up against, and no one day is the same. But, you know, from a geopolitical perspective, we have, I think, yet to see the full totality of what this could be. But as you start to look at what the world supply is in that part of the country, you have to start doing some forward predicting on how that could affect. How do you shift and how do you start to work with your suppliers to get ahead of those things? Freight, you know, as Adam mentioned, you know, that last mile, not only from a fuel perspective and an increase in that, you know, you tie that along with everything else, and it continues to exacerbate the situation of which we've all been living in.
Yeah. Yeah, you said something too, though, that I think is really important. You know, you mentioned that you have a partnership with your suppliers, and I think, you know, before anyone else got on the call too, we were just kind of chatting, and it does feel like we're all in this together. So even though there's definitely hard days, and you know, we're seeing price increases and things like that, it does give some comfort to kind of feel like everyone is in the same challenge. So no one's really being kind of singled out here. Let us go a little bit deeper, Jerry. Maybe you could walk us through a little bit more specifics around what we're seeing and kind of how it's affecting our economy.
Yes, I'd be happy to. Again, just to reemphasize, 2021, you know, was not your traditional, if you go back to the 70s where you had inflation and, it was pure commodities and fuel at that time was big. But as Ashley just alluded to, we've never faced a time, I don't believe, where labor and shortage was such an issue, in logistics and operations. So 21 it was the most inflationary year since 1982. But not for your usual, if you would think, what would cause that in the first place would be, you would think commodities, but again, just want to emphasize it was some of these more peripheral areas. But since 21 into 22, it's more commodities seems to be taking over, I think, from an inflationary, unfortunately. And the two areas that, at least for 2022, 4 months in, is energy and the grains. Really think about it, energy is not so much, other than diesel fuel surcharges, it's not directly, associated with food service, but it impacts us all. It impacts the consumer as well, right? So, your production costs, your producers, everything, natural gas, drying for resins, it really, energy impacts a lot of things. And grains, I said coming into this year after 21, the last two areas I wanted to see break out at 22 were energy and grains. And what broke out the first 4 months? Energy and grains. So that's what's making everything so tough right now. Grains, obviously, wheat, I'll talk a little bit about Ukraine and Russia and what they produce, but, wheat's high. Well, wheat was high even before we came into this year. It was already a short global picture. But soybean oil, the food oil markets, we were talking before our webinar, now they're at all-time high. So it's across the board, and it's something that's definitely going to be a big component going forward. Just touching on some other areas too that have been kind of in the forefront right now is chicken breasts. I mean, I never thought I'd see the day where chicken breasts, bone skinless chicken breasts, continue to go up and up and up and up. Usually you hit a headwind when you get above ground beef, beef trim, even wing prices. So definitely some big demand there, and that's a big component of chicken, although some of the sectors aren't as inflationary. I mentioned dairy a little bit because dairy, other than $3 block prices in 2000, actually that sector has come down. That sector's come down. The last 2 years wasn't really that inflationary, but unfortunately this year it's kind of joining the fray, especially with cheese prices. So wanted to mention that. And before I talk a little bit about the events and the fundamentals out of these countries, this just shows a year over year, kind of what I just spoke to. Inflation, if you can see, grains and energy are obviously those big components. So, and it'll be key going forward what those sectors do. Just touching on Ukraine and Russia, I think the best way to describe it, it just exasperated an already tough situation, right? We all know that. Just to give you an idea, I'm sure you've even heard this, but Ukraine and Russia probably combined account for about 26% of the world exports, wheat exports. Now, Russia is more in the line of your softer, lower protein wheats. Ukraine is more of your higher protein, your hard wheat, which is your red wheat, which is probably impacts most food service a little bit more. But Ukraine is also a big food oils producer. They're a big corn, especially supplier for the EU. And the key thing here is that their exports out of the Black Sea are still shut in. They've been very hesitant to reopen with everything going on there with the conflict, but they're shut in. So that's kind of the scenario there. Now with Russia, Russia's got two major components, and Russia, like Ukraine, is a major wheat exporter. And I was reading a couple of days ago that Russia actually expanded its wheat growing almost double over the last decade, where most of the rest of the world countries did about a third. So they've become a bigger player in wheat, and they have exports. And from what I understand, in recent days, recent weeks, their Black Sea operations are operating. And believe it or not, they're saying that they're even getting exports and sales are happening now. Probably not to their, with some of the constraints and tariffs put on them, that they're finding new business. So just wanted to kind of touch that. But one thing about Russia, and I'll move on here, is that you got to remember Russia's a major energy provider, especially to the EU. So they're a big petroleum, natural gas provider, petroleum products. And the reason why I mentioned that, a lot of the EU is sanctioning, trying to get off with everything going on with Russia, but I kind of call it a geopolitical kind of a quagmire, right? Because they got to figure out, these countries in the EU, what they're going to do. So the reason why I'm bringing this up, it sure is going to bring volatility, unfortunately, continue to the energy markets going forward, and as it plays out this year. And you notice my last point, we didn't notice, this is kind of something that really hasn't hit the mainline news yet, but it's a developing story. I'll touch a little bit about this when I summarize at the end, but China, who is a major, obviously, trader and exporter to the world, is having Shanghai's port is the largest in the world. And that, unfortunately, they got COVID, and that pretty much that city's locked in. So it's something I'll touch on with a little bit, but that I'll explain those problems a little bit. But just kind of that's the playing field where we're at right now and what's happened and what continues to happen.
All right, thanks for that, Jerry. It's not great news, but you know, I think if we arm ourselves with some information, we can sort of help circumvent some of this. So you know, this is certainly not a marketing presentation here, but you know, Aerostream has some solutions that we believe can arm consumers so that they can sort of alleviate some of this, or at least understand what's happening a little bit more. So both Adam and Ashley are Commodity One customers, and we just wanted to kind of talk through some of the solutions that we have. So our Commodity One Essentials bundle is really about commodity fundamentals. We cover, this is a daily report, a weekly report. We send these out to kind of describe what's happening with price momentum, give some analysis and price forecasts that would cover, you know, anywhere from 12 to 24 months out in the future. We cover 200 different commodities and food service items. And, you know, like I said, we have daily, weekly reports. We put out commodity prices, a commodity outlook report. And then we also have one tier above that is our forecast, offering our forecast bundle. This is the essentials that I just talked about, plus a customized report that includes the most important restaurant commodities, things that touch on your key menu items. We have you know, charts, forecasts, historical prices that were realized. In addition to that, you can see in sort of the bottom left-hand corner of the screen, you know, I have a bunch of different screens that are up there that we offer. We also have a forecast dashboard that is interactive, and our customers can go in there and choose the commodity that they're looking for, and look at historical prices, and then, like I said, the 12 to 24 month forecast out there. And additionally, we have another module that's part of our core solution called Supplier Discovery, and this allows customers to go in and do some market research on suppliers that might be in a certain category. It gives information on the products that they have, and you know, just some basic information on contact and ways that you can get a hold of that supplier if you were looking for, say, a secondary or tertiary supplier, as we were talking about before. And then lastly, we have more of a commentary centered offering that takes the essentials and the forecast that I just talked about, and there we're really offering forward contracting consulting. We offer a quarterly call, more targeted services. So in summary, you know, the Commodity One team is really looking to help its customers navigate markets and protect profit margins on an ongoing basis. So to kind of loop this back around, Ashley, can you tell us a little bit about the way that Commodity One has helped restaurant growth services out and how you guys utilize this?
Yeah, you bet. So I kind of start my mornings off with the Commodity One report over coffee, and what I really do is I like the kind of consolidated, really high level detail or high level data that comes across that allows me to look at current markets. It allows me to look at a pivot. So it gives me data points to review, and then what pricing was prior year. And so I'll start with this. I use that to then dig even a little bit further. But what it allows me to do is have very transparent conversations with our suppliers when it comes to pricing. and their challenges when we talk about just the raw material side. So it doesn't include obviously all of the other inputs that are a challenge, but it allows that pricing transparency. So I start every day off with my commodity one, and then again, I dig in from there. So I can use it for past, right? So I can do some benchmarking against past and how we performed in prior years, and then predictability kind of forward and demand planning. And it allows me to be very informative with data when I go and talk with marketing and kind of the executive team on how do we utilize the data, how do we predict the markets where they're going to be, so that we can make decisions from an organizational perspective that allows us to deliver on the commitment that we've given to the board, right? And forecast and numbers and spend. And so mixing in and out of items becomes super important. And this is just one of the tools that we use to do that at RGS.
That's great. Thank you, Ashley. And Adam, kind of the same question to you. How at GA Foods are you guys using this to make smarter decisions?
Yeah, I would say from the daily report, I would say my team and I all look at that every single morning when it comes out. And I think it helps not only from looking at the previous week, but also previous month and then previous year. So it's nice to just have all the highlights in one place. So we look at this regularly. I would say from like an organizational perspective, we use the dashboard more than we would use this report. And that way it helps us not only for full year budgeting, but also rest of year budgeting. So we're looking at the same period versus the previous year. We're also looking at the forward-looking market data that's provided to provide a budget, again, for the full year, but also as we need to pivot, it's helpful to look at it for a rest of year. And then, again, as Ashley alluded to, we use it regularly to have transparent conversations with our suppliers. So obviously there's the protein commodities that we're regularly looking at, but we also use the disposables, and that's helpful for some of the packaging pieces and also the diesel fuel costs. So where we do have suppliers that are delivered costs, we're leveraging that. I would say we probably use this dashboard every time that we're having a conversation with suppliers, because it's very helpful to just have market intel in one place versus pulling it from multiple sources. So
Yeah, that's great. And I wanted to circle back, again, I think it's important to just underscore all this, that we're kind of in this together. So when you have those conversations with your suppliers, do you guys feel like this puts you on a level playing field with them? Because they probably have some understanding, probably a very good understanding of what's happening in markets. Do you feel like this makes you a more informed consumer?
I would say from our side, really it depends on the suppliers that we're speaking with. If they're true like supplier partners where they're providing something that's customized to us, or something that we may not be able to get in the open market. I would say for those conversations, we try to have really transparent conversations to understand like what percentage of the food costs is the raw material, what percent is packaging, what percent is labor, what percent is fuel. So in that aspect, it's very helpful, and I think we're sharing information at some level to say like, this is what we're seeing, what are you seeing, so that we can have open dialogues. I would say on some of the I would say more transactional items, or even like spot buys, it's really helpful for us to just be able to have that open commodity trend that we can follow to see if it's seasonal, or if this is a blip and it's just a one-time higher cost or whatever the situation is.
All right, yeah, that's great. In a second here, we're going to get to sort of the outlook, but I just kind of spurred another question, and I'll go back to you, Ashley. We've talked about having conversations with suppliers. Do you feel like do you have these same types of conversations with distributors too?
We do. I mean, I think, from a distributor perspective, they've been challenged. Obviously, fuel is very big for them. Their labor pool is very big for them. And so turns become important because that's how they make their margin. So, you know, more from a fuel, probably and labor perspective, not necessarily, a costing, unless you're buying something that is off the shelf from them, right? And so two different models there, and we are customized house. So anything that we do stock at our distributors is on our behalf. And so not a lot that we're pulling off the shelf from them, but I think as much data as you can get your hands on, and the more informed you make yourself, the conversations flow easier. It becomes really, again, it's very transparent, but it is a partnership, and it's not necessarily one wins over the other. You have to be flexible, but you still, it's a fine line. So the data just continues to help drive those conversations.
That's great. Yeah. All right. Well, let's see if there's any good news here, or there's maybe a light at the end of the tunnel. Jerry, do you want to walk us through sort of how you're seeing things?
Promise I'll end with some type of good news, with something. I'll find something between it. So yeah, no, it's again, we're at a precipice. I've been doing this for a long time. Again, the sustainability of the inflation, I don't know if it's sustainable. It's pretty, as we know, I know I'm stating the obvious, but the question is, how long will this last? The question really is how long will it last? And it kind of leads into the second part. For the U.S. consumer, unfortunately, his purchasing power starts to get hit. So Ukraine, Russia, just to touch on that, from the military outlook, it's still happening. It seems more targeted. I don't think it's more of some of these these old former events where it's a blitzkrieg, but it sure as heck is impacting commodity prices. As I mentioned the items that they're impacting, but when you look at where prices were, especially for wheat prior to this event, then you had what the wheat markets did originally, right when it happened, they shot higher. It's important to know that our wheat prices are not as high as those levels. So that's kind of a new ceiling, right? So hopefully that's it. We kind of materialize. Now, when you look at Russia, I mentioned they are getting more exports out. They are selling, probably different partners. So at least I'm feeling not as dire or fearful of lost supplies as I was probably 6 weeks ago. Okay, that doesn't mean there's not going to be more domestic needs and demands, especially in Ukraine, for their people and their food. And corn, they mentioned corn. They're big in corn. So and then the energy component, I can't emphasize enough of what we're going into the summer months right now, right? And you got a lot of sanctions against Russia, not just for their product, but also for their currency and how they're going to pay it. As I think, as of tomorrow, they've actually threatened to turn off natural gas for Poland unless they accommodate. So you're going to read a lot about these developing headlines, especially out of the EU, as you work your way through the summer. But where it becomes tough is when we get into next winter, right? Because energy becomes more important. Commercial, home heating, right? How are you going to operate? So that's why I mentioned, I use the word I made up here. It's kind of a geopolitical quagmire, because the EU's got to figure out, if they start boycotting or sanctioning this energy, where are they going to make it up? Now, I was reading that EU actually has coal, but they don't use a lot of coal anymore, but they could do it if they wanted to. So I'm just playing that out because it's sure as heck going to keep the energy markets volatile. Now, how does that mean? How does that translate to us? How does it get back to us, right? Diesel fuel, right? I mean, that's the impact. I mean, we've had 7 consecutive weeks of retail diesel fuel prices, EIA, over $5 per gallon. In 2008, the former all-time high was right before the recession, was $4.76. So very touchy situation. That's going to be the headwind for food service, and unfortunately, it lags, right? It comes in lagging, a lot of those charges. So, hopefully the markets back off. Good thing with energy, kind of like I just mentioned with wheat, crude oil is not as high. I think went to 130 right when it happened. It's backed off, but volatile around 100 area. So, gasoline prices aren't as high as diesel fuel. So it's pretty much all about diesel right now. And natural gas will be big too. Pace of inflation, how it affects the U.S. consumer. You all know, you see traffic in your restaurants and units. It's a big question. You have a lot of stimulus out there. I talked to a lot of companies throughout the week, and it seems like traffic's still decent. So we are working our way into the springtime. Weather warms across the country. Usually see activity pull up. So it's really going to be an interesting time to see how that balances out. Right now where prices are and what the consumer can do. So it'll just play out. Then the $1 million question that is we've been asked, I'm being asked more and more, is this the new normal? Well, let me just point out, to have a new normal, first of all, the markets have to subside. They have to identify a market top, right? And all markets make a top and then they come down. Again, I don't think it's sustainable, but when that happens, when that will happen, and it will happen, prices will come off. Now, I don't think we're going to go to pre-COVID 2019 normal. I think we're probably going to wind up somewhere in between, what our old normal was, 5-year averages, and kind of where we're probably at right now. So I do think that, if you ever look back at any type of wholesale commodity inflation, a lot of times those prices stay in place. I remember in 2012, you had high grain prices, right? Wholesale came off, but cereal prices, bread prices stayed higher. So it is probably going to put some permanent inflation into the markets, but not to the degree, hopefully not to where we're at right now. So the new normal is a big question, but I think we, again, have to identify a top. New normal will be between 5-year average and currently what we just established here in the last couple of months. With that, I'm just going to touch one thing, because this is, again, I want to use this opportunity, and we're talking about geopolitics, how they impact, and I just want to bring up the China, bring a little bit more clarity to that. As I mentioned, Shanghai ports is the largest in the world. Not a lot of press about this in mainstream media, but I have found some resources that their shipping and ocean freight is really backing up. I mean, kind of what happened in the United States on the West Coast, but because of the lock-ins, and they're severe, I'm hearing anywhere between 10 to 20% of their normal operations. Now, what does that mean, right? I mean, there's such a big importer-exporter, and it's probably going to impact, from what I understand, more of electronics, raw commodities, silver, all that type of stuff that could impact us maybe later this year, come Christmas time and the holidays. But from a food perspective and a commodity perspective, it's two ways to look at it. From what I understand, it's probably going to start servicing and showing its challenges here and problems. But it's probably going to bring energy demand down a little bit too, right? Because if you got all those lock-ins, less stuff moving, hopefully that alleviates some crude oil prices and energy. All right. So that's one way to look at it. And I think it's more non-food items, but I do one area I thought about is seafood. And I know a lot of companies don't do seafood, but a lot of companies do seafood. China is a major in the primary, from a percentage perspective, operation, processor for seafood, packaging of seafood, and redistribution, bringing it back to those destinations from the fishing. So the reason why I'm bringing that up, that sure as heck can be impacted. So, and what worries me about that, if that happens later this year, as probably expected, it's going to put more pressure on protein demand, meat proteins, so for that. So I just kind of wanted to end with that. I do want to end with some good news and find any that can help. I did, I'm looking at the markets every week, John and I. I did notice, we were talking before our call, that USD choice box beef cutout's actually lower than a year ago. Seasonal gains have not been that strong. Now, ground beef prices are high, but a lot of the steak cuts, some of the steak cuts are actually down anywhere between 10 and 15%. So that's good. The USDA pork, and there's 2 years, 2021 and 20, we are lower than that for April. Pork, same thing. We're lower than a year ago, but pork prices made an all-time high last June. But if you go back to 2014, there was some challenges back then where pork prices were high. So, and kind of lackluster pork seasonal price appreciation is occurring. So that's good. You know, I think, you know, any light, you know, I can find, but at least we're not seeing the seasonal gains taking off, which it still happen. But again, that plays into how we play out this springtime as the temperature's warm.
Very good.
Yeah.
Sorry, I didn't mean to cut you off. Were you
No,
going to say?
I wanted to pause there. Absolutely. Pretty much. Wanted to go through with what I wanted to talk about. Thank you.
Very good. I just wanted to, you know, in terms of the audience, if you guys have any questions, please, you know, go ahead and post them in the chat. You know, I see a couple people have asked questions about whether or not we would be posting content later. Yeah, we will, after the webinar is over with, we will put everything up online. We'll put a recording of this, so you'll be able to go back through it if you'd like to. So I just wanted to kind of bring this back around to some of our other panelists. So Adam, you know, obviously you heard Jerry talk about the outlook there. What's GA Foods doing to kind of future-proof yourselves and kind of look out toward the future?
Yeah, I would say we're trying to take positions where we can. A lot of our suppliers are willing to do it in certain, I would say, durations of time without going too far. Others, we really have to leverage that relationship to see what we can do to even take a position. We're leveraging spot buys wherever we can that I would say are opportunistic to just try to alleviate some of the inflation. And then I would also say, again, as I mentioned earlier, we're pivoting where we see opportunities. So if we see favorability in pork, then we may flip to that versus using a poultry or a beef product.
Oops, I was on mute. Thank you very much. And Ashley, so this is a question from the audience. If you had to put a percentage out there around a percentage of contracts that you've gone from long-term pricing to more spot pricing, do you have a perspective on that?
Yeah, I mean, a percentage, I would think it's a small percentage when you look, if you actually compare it up against total spend, right? Because the folks that, you know, make up a bulk of our spend, where they are our partners in that. But what we have done is that, you know, as we kind of approach the back end of Q4 last year, and even a little bit prior to that, is actually writing some flexibility language into those contracts, right? Where there's unpredictability on both sides, and so you want to cover and mitigate as much risk as you can. So writing language in that allows us to potentially take coverage further out if they're willing to do so. If we do see a market decline, we're able to look at overall volume. How far out do you want to go? Can you blend pricing? Are they willing to blend pricing, and those types of discussions? So if I had to put a percentage on it, it's a very low percent. And then I would also say we have a low percentage of our core suppliers who have not called on any force majeure or haven't fulfilled their end of the obligation through the last, you know, really few years. So that is, I think, a testament to the partnerships that we build with our suppliers. But you do have some that, you know, you take a different approach, particularly when you talk about volatile markets, oils and wheats and those types of things. Those contracts aren't necessarily going out as far as we would have done in the past, or we would like them to. However, there's just so much unpredictability that I don't even think I would want to take that position now. So it's a low percent.
All right. Jerry, I think, there's another question from the audience that that I'd like you to answer. So, we brought up geopolitics. Do you have any perspective on the G20 and how China and Russia might be influencing anything with that group?
I got a little bit out of my realm. I can tell you that they're two major players, right, in the commodity world. So usually you have the people who have the most chips can do the most influence. So, I do know with the developing events in Ukraine and Russia, a lot of people are trying to guess where China is on that, and will they be a buyer of some of Russian products? So, I don't really know, but I try to just focus on what's moving where and where that demand is needed for those certain commodities at certain times. I can tell you, as I went back to what I was saying, what's going on with China, I don't ever remember such a erratic time predicting things in foreign countries as I do, that's currently happening. So it's a tough question to answer, but I always remind myself I'm not that smart with the geopolitical world, but remember, people always got to eat. So you got to just follow the commodities.
It's a good perspective. Yeah. All right. Well, I think those are all the questions from the audience. So I would like to thank everyone for participating today. Thank you, Adam. Thank you, Ashley. It was great talking to you. Thank you, Jerry, for giving us your perspective. Unless there's anything else, we'll end here in a second. Like I said, after the presentation here, we will send out, a follow-up to the same sign-up link that you had that will have a copy of this. And if you are interested in talking to Aerostream anymore about our products or services, that we will reach out through that email as well. So thank you very much. Again, thank you to our panelists, and have a wonderful Wednesday.
Okay. Thank you, Adam and Ashley.
Thanks, Matt. Thanks, Jerry. Have a good day.
Thank you.
Bye, Adam.
Bye, Ashley. Thanks.